is. So if there's a lien for $2,000 and it shows here on something over the counter, and I look and I do my due diligence and I see that property is worth $4,000, I'm really not that interested in that property, because the difference in dollars between the $2,000 lien and the $200,000 and the couple of $1,000 property is not that great. What I'm looking for is a very, very fat difference. As an example, a difference between a $2,000 lien and a $100,000 property, or a $200,000 property, or a $300,000 property. And when I see that, okay, I know that that's a wonderful value if indeed that property doesn't redeem. But if it does redeem, no matter what the condition of the property is, I'm going to get my interest rate, all right, and I'm going to get all of my money back. And to me, that's desirable, right? So I'm not. I don't get into this first looking at a specific type of property. Some people do, and that's okay if you're the type that you're following specific types of property, and you want to know that you're going to get a 3-bedroom or 4-bedroom 2-bath home, and it's got a nice porch and it's on 3 acres. That's fine if you pursue the property, but I like to pursue the interest first and then back end myself into the property. And over the counter is a way that people that don't want to do auctions, don't want to go to the auction sales. Over the counter is a way that if people don't want to do the auctions online, over the counter is a great and actually very it's much less stressful for a lot of people, and even some people call it the secret way of buying tax lien certificates. So as you see, some counties allow you to buy both the previous year's taxes and this year's taxes. So you wind up with automatic interest on this, and your return on investment is so high on this. And again, what I love is that on the over-the-counter, no bidding, no competition. You set your own timeline. There's nobody pulling your strings. It's all up to you. That's why I like the over-the-counter. It's the in terms of a barrier to entry, there's none. I mean, it's just you look at what the over-the-counter sheet is, and it'll have what the counties are asking, and you'll know that those particular properties will pay the interest, period, the end. There's no bidding down on anything. There's no bidding down. There's no bidding up. There's no competition. It's just offered for the price that it's offered for, and you pay it. And at the end of the redemption period, either you will get all of your money back, all of your principal back with a sizable interest, or you will wind up owning that property. So either way, that's what over-the-counter does. It's just a great way to buy. So what happens is, and people talk about future tax positions in order to do that, you can do that with over-the-counter. But what I'd like everybody to start with is at least just start to buy standalone over-the-counter tax lien certificates. You can see if there are other taxes owed on that particular property, and you can be entitled to purchase future taxes on that as well. That's okay. There's no problem with it, okay? But what we don't want people to do is get confused on this. You don't have to buy the future taxes. If you want to, you can, right? But just get this, okay? You buy the tax lien certificate. You wait out the redemption period. At the end of the redemption period, either you're going to get all of your money back, that means all of the money that you invested, all your total investment back with interest, or you're going to get the property. Sorry about that. The slides actually went forward here for a second. I'm going to go back and just find them here. All right. So the next one we have the over-the-counter risk is that getting stuck with a property that you don't really want. Well, that's a risk whether you buy over-the-counter, or that's a risk if you buy at the auction. And here's the thing: that risk is mitigated by you doing the proper due diligence, knowing what the value is, okay, on a particular property that the tax lien is on. Right? Nobody can, nobody's going to be able to do that. That particular analysis, but you, or or get somebody to do that. You may want to call your advisors and talk about that, and what you can do in order to get yourself an analysis on a piece of property. But what you want to know is this. You want to know what the value of that tax lien is, meaning the price of the tax lien, and you want to know the value of the property. So that's the risk, because the county is going to sell you tax lien for the amount of taxes due no matter what. It has nothing to do with the value of the property. Understand that, all right? So, and the county, it's caveat emptor. The county is not telling you that a piece of property is owed a particular amount. So you want to get market value, you want to get comps, you want to get assessor value, all of these things, so that you have a pretty good idea as to how much that particular property is worth that you're buying the tax lien on, right? So how to buy the over-the-counter liens? Okay, you can call the county treasurer's office and just ask this. Say, do you have any leftover tax liens? And you can say, I understand those are called over-the-counter. So you can say, do you have any leftover liens? Do you have any over-the-counter liens? I would like to buy some, right? So if the answer is yes, you get down to the office with a certified check or a money order. Typically now the counties are asking for bank checks instead of certified checks, but a money order, especially a postal order, is always a great thing to buy tax lien properties with, and just get ready to buy. So what you want to do is when you get down there, if you're going to go to the county, or if you're going to do it online, look at the property list that they send you, okay, and ask, and you can ask if there's any issues with the properties. It says, that the county clerk will be happy to help, but understand this: they're civil servants, and really their job is to be civil to you. Their job isn't to develop you as an investor, but they will answer some questions within their ability, right? How to buy the tax liens at an auction? What you're going to want to do is pre-register. In auctions, there's almost always a pre-registration period. So you call the county treasurer, the tax collector, whoever's doing the sale, ask them for the details on that. Ask the county for the property list, right? So you do that. You ask the county treasurer or the tax collector for the property list, and then ahead of time, what you do is determine which properties that you want to buy. So when you do that, you have to do your due diligence, right, and then mark them up on your list, so that if you're going to go to the sale, you know what the price of the lien is, and you also know what the market value. You got to know what the market value of the property is if you want to be a right kind of an investor. Now, if you ask the county, do I have to know what the market value is? They're going to tell you no, because you don't have to know what the market value is in order to buy the property. They'll sell you the tax lien certificate even if you don't know what the market value is, but as an investor, you're going to want to know that, right? And then you're going to want to know different fees, and, most of it is just straight. There's usually not any, outside fee, for to participate in an auction or to buy. Every now and then, counties are starting to charge, a fee of, like a bank might charge you to use an ATM, and, they may charge you a $5 fee for this or a $2 fee for that. In general, that's not the case, but every now and then you might experience something like that. Don't be turned off. It's not going to impinge on the investment quality of a tax lien certificate investment, right? You're going to wind up having to fill out a tax form, okay, which is W-9 before you bid at the auction. They put that in front of you. That's just the way it is. Fill out one for yourself, another for your corporation, and then what happens is people do this is that then they can bid as themselves, and they can also bid as a corporation. Okay, some people do that, and as a strategy, and the corporation bids one thing, they bid something else. Some people do this when they're really buying for two different accounts. You might be buying for the one account which is your income account for spending money for your yearly income, and then the other account might be with your self-directed IRA, and you're doing that in that entity. Okay, so typically that is really the way you would do this as a strategy, because one account for spending money and the other account for your retirement income. And here's the thing: most of the counties are going to require certified funds, or, like I said before, a bank check, and either they're going to ask for payment in full right there at the county, or from 2 to 48 hours, depending on the county, for payment in full. The counties don't want to give you credit on these things. More and more counties want the money faster and faster. That's just the way. That's just the way it is. And just remember, as an investor, what you're doing, okay, and what we're doing as tax lien certificate investors, is that we're providing liquidity to the counties by buying these certificates. So this is not something that they want to wait a long time to collect their money for. They want the money as quickly as possible. So here's the thing with the redemption period. Talk to the county tax collector, and find that they'll tell you which properties will be likely to redeem. Some of them might give you like a little insight. They'll have some clue. In general, what you'll find here is that properties that are vacant have a higher chance of non-redemption. Properties that are owner-occupied have a better chance of redemption. Meaning, if it's a regular 3-bedroom, 2-bath home surrounded in an area by other 3-bedroom, 2-bath homes. When I say they're occupied, and those are the properties that'll redeem mostly, and the properties that won't are mostly the properties that are vacant. And remember, if it doesn't redeem, that means you get the property, and if it does redeem, that means you get all of your money back plus your interest rate, right? So that's it. So and then it says, go to look at any properties that you feel may not redeem. You don't want to get stuck with a lemon. Just get this: if you know the value of the property, right? That you've done your due diligence, whether it's vacant, it's not vacant, and you know that you're paying $1,000 for a lien, and the property is showing a value of $100,000. That's not a lemon. The only way you're going to get stuck with a lemon is if you don't know the market value of that property. So you have to know the market value of the property if you're going to be the right kind of investor, right? And which is an investor that wants to keep safety on their side, right? So when it's auction time, okay, what you want to do is make sure that you're bringing the certified checks or the bank checks or the money orders, right? What you're not going to do is bring a checkbook because the county doesn't want they don't want your personal checks. They have nothing against you personally, but the county definitely does not want you to bring your checks. And again, same thing when you're buying these, at the auction. Just understand what's going on. The county is selling these certificates because they want money and they want it now. They don't want to start dunning you and getting into a collection mode. They've already been through that with the taxpayer, right? So if the county has done that with the taxpayer already, that's one thing. So that's very important. So you want to make sure that what you're doing is when you go to the auction that you're prepared to bring, okay, the certified bank checks, okay, and or the money orders, but do not, I repeat, do not bring the checkbook because the county is not interested in getting your personal check. They have been through this collection procedure with the taxpayer that has a delinquency because the reason why it's a tax lien certificate that you're able to buy as an investor is because a taxpayer didn't pay their taxes. That's why it's delinquent, okay, and that's why also you have this situation where you're buying this tax lien certificate, okay? All right, that's the way it is. So, and the other thing is in talking to the competition, right? If you're first time auction goer, right? What you want to do is, you can just get in there, you can talk to them, ask for tips, what to expect. They learn some valuable information about the auction. You can strike it up, but these can be good people, all right, to sell some of your or assign some of your deals to. There's nothing wrong with that, right? But what you don't want to do is to talk to them about and any of the competition at at one of the tax lien auctions. Don't talk to anybody about what you are looking to bid, right? Your bid is strictly between you and yourself, or you and your partner, right, or you and the entity that you're bidding under, right? And if it's your self-directed IRA, what you don't want to do is give that strength or power to anybody else, right? So you know what your strategy is. We would suggest that you keep that close to your chest, right? So during the auction, whether it's a round robin or a silent auction or it's just good old-fashioned bidding. We're talking about where somebody is, calling a bid. Anybody going to start it off $100? I got $100 anywhere. I got 100. I got 100 and a quarter, 1.5, 75. 75 is bidding 2, 2 and a quarter, 2.5, and 75 again, and 3. Whatever that is, that's open outcry if somebody does that. But stick to whatever your plan is, right? If it's a bid down auction, don't go below what you see is the lowest acceptable interest rate, right? Stick to your guns and then follow your plan. So what you're doing is you're putting your plan together and then you're following your plan. So you've decided what you're going to pay ahead of time. Do not go over it, right? So, I mean, there's a lot of liens that need to be sold. Okay, most of the auctions are going to move rapidly. You're going to wind up bidding at a fast pace, right? You can shout out your bid. You can stick up your hand. Okay, make sure that if you're bidding in an open outcry situation, that people know that you're there, right? So the idea is it's not like, when you're watching the movies, and somebody's touching their nose or they're touching their ear, and all of a sudden they bought a priceless piece of art worth, whatever it is, $100 million. Okay, you're talking about actually having to make your bid known. So you'll either yell with a yip, or you'll stick your hand up and say yeah, or whatever. That that's typically in an open outcry method. But for those of you that going to the auction just isn't that attractive, again, the over-the-counter is a great way to buy, right? So, I mean, stay in the room during the breaks and the off times, okay, and talk to the people that are around. But I would use this time, all right, where there's a break to do networking with some of the other people, and just swap cards quickly with them, so that if you happen to have a particular tax lien certificate or something that that may not fit into your investment criteria, what you can do is assign it or sell that to one of these other investors at a later time. This is the time for you to do the networking, right? Here's the thing too. So, if we're talking about areas that have homestead properties like Florida, Texas, is that understand that institutional investors don't usually bid on liens attached to non-homestead properties because the bankers know that these properties are less likely to redeem.